Bakari. Good afternoon and good to have you, madam.
Thank you very much. Good afternoon. I look forward to a very rewarding session this afternoon. Thank you.
Mrs. Moji Bakari.
Good afternoon. I look forward to a very rewarding
session. Thank you very much.
Thank you very much.
Next, we have the co-host of today's event, Chairman, LCCI Financial Services Group, Mr. Obina Anyang. Mr. Chair, good to have you. Thank you very much. Next, I would like to welcome our keynote speaker for this event, Mr. Robert Esov, founder and chairman, Invest Africa. Mr. Esov, good to have you, sir.
Good afternoon, and thank you very much. What a great honor to be here. Shall I go ahead?
I think so, Rob. I think you might as well give it a start. Could you, Rotimi, could we put up Mr. Hersov's slides, please?
And in slideshow mode, if that would be great. And I do need the screen to be shared, please, so I can control them. Rotini, if you can put them, go to slide 1. And is it possible to share the screen? That's it. And if I click, does it work? Rotini, can you share the screen? If you could share the screen with me.
Yes. Okay. Can everyone see my screen? I just share my screen.
Yes, thank you. If you could share it with me so I can control it, I'd be most grateful.
Okay. Okay. Okay.
I know the panel are waiting excitedly for me to get through my slides, but I think this will set the scene for what we're going to talk about. And what I've decided to do is a SWOT analysis with some headline comments, because if we have a look at Nigeria from a SWOT basis, strengths, weaknesses, opportunities, and threats, which is something we learn in our first 2 years in business or economics, it's a very good way to frame a country or frame an investment opportunity. And in doing so, we can then view Nigeria independently and as part of an investment destination from a jurisdictional competitive environment. Rotimi, is it possible for me to get control of the slides? Rotimi? Faisal, do you mind?
Okay, I can. Okay.
Yeah, if you click share screen and click my name, it should be possible. Routine, what you need to do is just allocate the screen share to me. View options, request remote control, there we go. Request. Folks will be
Mr. Yes, you can share. You can control the slides. You can do that right away.
Okay, fantastic. How do I just need to get into big slideshow. Here we are. And then slideshow from the beginning. how do I get this to, how do I get it to cover the screen, Rotimi?
Rob, if you go into the right-hand corner of your screen, you've got an icon there. Just press, yeah, that's it. There you go.
That's it. Okay, folks, ready to roll. Apologies for the delay. I will be through these as quickly as possible. But what I want to do is frame the opportunity that is investing in Nigeria, strengths first. And there are about 14 bullet points in strengths and weaknesses, and then opportunities and threats are fewer. And I got input from Dele Babade, from Helios, from Baba Soyoya, and from a number of other very generous contributors. So this is a very comprehensive view of Nigeria. First and foremost, we know about the population. It's huge. But the most interesting part of it is over 60% of the population are young, active, and these are the big future market or current and future market for goods and services. Also, the other great positive, if you look at jurisdictional competition in Africa, is the Nigerian workforce is generally well educated, and the South is particularly literate, highly literate. There's a high level of urbanization, and regionally within Nigeria, and we have a nice map sitting in the picture, there's some great investment stories. Nigeria is Western leaning, part of the British Commonwealth. It's got great UK and US connectivity, and a lot of British and European and US companies are already invested in Nigeria, successfully so. Plus, as we know, it's a functioning democracy. Regardless of who gets elected, there's a peaceful move to the next leader. There's strong capital markets, debt and equity related to Nigeria, and they have attractive returns. The price equity ratio of the Nigerian all-share index is about 7.5, 8 times versus 10.5 for the Morgan Stanley index. The banking sector, and Kola Karim stresses this when he speaks to me. He says the banking sector is robust, particularly the local banks, and local and foreign transactions are able to be facilitated. The local banks in particular are most impressive. And there's a very fast-growing telecommunications sector which links into the technology sector with 186 million active subscribers. In addition, a great weakness, which we'll get to, of Nigeria is electricity supply, but the regulatory situation is improving and generators supply consumers directly. Interestingly, in South Africa, where we had Eskom for many decades, not only providing electricity for the whole of South Africa, but also exporting into Africa, we now, with the meltdown of Eskom under the ANC, have to buy our own generators. And I had mine installed today. The crane put it in. The informal sector is a very, very powerful part of Nigeria, as it is with many countries in Africa. And it's considered to be over 60% of GDP, which is a great strength. And as we all know, the hydrocarbon sector, with the natural resources, is a big driver of Nigeria, but the agricultural potential is huge. The public and external debt to GDP is actually relatively low. It's at 16, closing in on 17%. And that's a healthy indicator. And Nigeria is also very well positioned, but also very active in promoting public-private partnerships and more strategic alliances with foreign companies. And I'm going to come down to this point a little bit later in my presentation as a key potential opportunity for Nigeria. And ease of doing business. Nigeria has been a relatively difficult country to do business in, but it's improving. And from one year to the next, from 2018 to 2019, in the rankings has gone from 146th to 131st. So it would be good to see Nigeria under 100 in the next 2 years. In addition, Nigeria has a very powerful diaspora. There are Nigerians all over the world who've been particularly successful building businesses and generating wealth, and they return $20 billion annually to Nigeria. Within Nigeria, there's a very strong expat sector, and they bring money and skills. The pension fund assets are extraordinary. Over 10 trillion naira to date. And we know Nigerians are fantastic entrepreneurs. There's a very strong entrepreneurial culture, a great emerging middle class, and incredible creativity, with Nollywood just one great example. In addition, very recently too, there's been strong attempts to tackle corruption, which is very encouraging, and very senior people are being taken to task. So let's quickly move on to the weaknesses. And we know these weaknesses all too well. The biggest weakness is the reputation of Nigeria. Whether it's fair or unfair, Nigeria has an image problem. In addition, unemployment is huge. Not sure what's going on the slide here. Sorry, what have I done here? Resume slideshow. Apologies, everyone. Unemployment's around 40 million. And there is a number that I read today. I think it was Aubrey Hruby in her superb analytical report says that 87 million in extreme poverty. And I know that's a definition, an international definition, and many of these people are actually operating in the informal sector. But it is a worrying element to keep an eye on. In addition, as we all know, that the economy is highly vulnerable to the global markets, especially the crude oil prices. And this year in particular, Nigeria has been hit particularly hard. There's limited diversification of industry in Nigeria, but that in itself is an opportunity. Over 90% of export revenues are from oil and gas. In addition, from the government, even though there seems to be better consistency, there's inconsistency right now and a lack of consolidation or lack of clarity amongst policymakers. The transport and energy infrastructure is underdeveloped, and electricity, again, is a big issue. A great majority of Nigeria either don't have electricity or don't have consistent electricity. And we in South Africa are starting to learn what that's all about. Operating costs are high, and there's a very high tax burden. There's a multiplicity of taxes, so it's very complicated if you're in the tax-paying category to deal with these multiple taxes. The tax code could be simplified. In addition, beneficiation, and I think this applies across most of Africa. We've got the resources, we've got the exports, we've got the demand. We need to move one level up, as Dr. Carlos Lopez says, and beneficiate more. The manufacturing and industrial side of Africa is needed to generate exports. Tax revenues also, as a percentage of gross domestic product, sitting at over 6%. And government revenues are too dependent on exports per capita, or oil exports per capita. There's a high debt to revenue ratio. And I think a big problem in Nigeria is actually tax collection. There's been no focus on getting it right and getting those tax revenues up and on a consistent and fair and transparent basis. And it's generally seen as a tough operating environment for locals and for foreigners. Bureaucracy. Well, unfortunately, bureaucracy is probably a result of the British colonialism, but it's there in India, it's there in Nigeria, and it seems to be there to stay. And from a foreign investment point of view, there's too lengthy a dispute resolution process. You know, if somebody gets into a dispute, they want it resolved in a defined period of time and not take too long. Currency depreciation and convertibility is a big issue for foreign investors, and multiple federal states with multiple regulatory landscapes makes it very difficult for foreign investors to be able to do a pan-Nigeria strategy. Security issues we know too well about, and they're only getting worse. Fulani herdsmen, Boko Haram, the Delta militants, and the spread of radical Islam is a real threat, not just to Nigeria, but to most of North and Central Africa. And too many illiterate women in the North. And unfortunately, that is driven by the religious preferences of people in the North. And that is unfortunate because women are great contributors to the economic development of Africa. Corruption permeates the economy, and that truly is something that needs to be dealt with. And unfortunately, it's permeating the South African economy too. So headline comments on strengths and weaknesses. A key issue is that Nigerian banks need to be encouraged to invest, encouraged to support business, because they're too risk averse and they're sitting on big portfolios of government bonds rather than lending. And it's a really lost opportunity in Nigeria. A growing population in Nigeria are not being banked fast enough. So financial inclusion is a real challenge. Economic nationalization manifests itself most acutely in the lack of hard currency and international currency. And investors are going to invest but never come back if they can't get their money out. So this is something that really needs to be advanced and developed to make Nigeria more investable. And in addition, as I've mentioned before, the multiple state governments, as you can see in the map, make pan-Nigerian strategies a lot harder to implement. Although, on the flip side, the great urbanization of Nigeria allows you to actually focus on Lagos State, for example, as a country on its own with its great population. We now move to opportunities. The high population growth of 2.5% per annum is one of the highest in the world, and there are more babies being born in Nigeria in a year than the whole of Europe. Huge underpenetration of every product and service, which if you combine that with the demographics offers a fantastic opportunity to enter the market and do well. There's a big potential opportunity in the financial sector. I did mention as a weakness, financial inclusion was low. So this again is a huge opportunity. And the agricultural sector is one that I'm particularly interested in, particularly if you could get into the full value chain in agriculture. There are other areas of opportunity that foreign investors are looking at and taking advantage of, in addition to oil and gas, obviously agriculture, but minerals, metals, manufacturing and beneficiation for the local market and for export, but also tourism and hospitality, and of course the power sector. And more recently, there have been opportunities in the renewable energy sector. And for a country that produces so much fossil fuels in the form of oil and gas, it's a very positive thing to have government encouraging investors to come into the renewable energy sector. In addition, in the courier and logistics sector and warehousing and distribution, this has taken off like a rocket across worldwide, and Nigeria offers enormous opportunity. The futures exchange offers hedging opportunities, and the automobile industry, there are now way more opportunities to do local manufacturing. Education and health, probably heavily underinvested, but, and even though the government has spent $9 billion on foreign education and medical tourism, that is an area that really needs investment and ought to be encouraged. And the technology sector, particularly when it comes to things like improving tax collection, big opportunity. A friend of mine, Carrie Gahiga, has a MobiVat, a tax collection technology business that's been rolled out in Rwanda. Those are the kind of businesses that entrepreneurial Nigerians should be launching. So the tech sector to me is of high interest in Nigeria, and there have been some successes already. And there's also an attitude by Nigerians that they are expecting to pay for everything. So there are opportunities across most sectors. A headline comment here. To me, Nigeria should be the #1 investment destination in Africa. Governance is holding it back. We've heard this so many times before, but Nigeria really does have the call, the draw for foreign investors. Just need to unplug it. I'm a big fan. Threats. We've got relatively few here. So in a liquid foreign exchange market, multiple exchange rates, there's a high cost of doing business, and that makes products and services somewhat uncompetitive, particularly imports. And access to capital is a big issue. Over 90% of small and medium-sized enterprises don't have access to capital. Debt to revenue ratio over 70% is unsustainable. And there's not enough money being invested in health and education. It's a big problem. Plus, like many African countries, there's been a migration of skilled workers to developed countries, although certain countries, Rwanda is a good example, Cote d'Ivoire is another example, have had a reverse diaspora. And that can be hugely beneficial for Nigeria. And on the demographic story, people are always saying what a huge opportunity is. But if it ends up as youth unemployment and lack of economic opportunity. It's actually the greatest threat of all. So moving quickly on a final comment, Nigeria should be the #1 investment destination in Africa, but the competition's really coming from smaller, more vibrant countries, but also groups of countries working together. Moving quickly to, I see some comments. Access to capital, huge challenge to SMEs. So funding options available. And this, I've got just 3 slides, and then we can merge this into the panel. So there's a lot of debt and equity available from international investors. It's all there. And there's significant increased interest in Africa from international strategic investors who take a long-term view on the continent across all sectors and industries. Now, South Africa, the country I know the best, people are very negative right now within the country, and most foreign investors are very negative about South Africa now because particularly after the Zuma years of destroying the economy, but there's not a good feeling other than from strategic investors who are still buying into the country and looking very long term. And Nigeria should be taking advantage of those opportunities. Nigeria should actually be facilitating those opportunities and ensuring that those big strategics that are coming into Africa see Nigeria as their first port of call. Local African financial institutions should be looking at partnering with these strategic investors and bringing the Nigerian investors and entrepreneurs into a 3-way alliance. This really is the way forward. So you have local Nigerian entrepreneurs or businesses, international strategic investors, and then the African financial institutions like pension funds, DFIs, and private equity firms like Helios. What we need to do is ensure that there are standard requirements and procedures to access capital. Firstly, and I know these things are being worked on in Nigeria and are improving, but transparent reporting and governance, a track record of performance and growth, aligned management teams, allowing currency hedges through hard currency revenues. What can we expect from fund owners and investors? So currency convertibility is fundamental, and repatriation. Obviously, the rule of law and property ownership. Reduction of bureaucracy is essential and must continue and at all costs. And on tax legislation, the key is not only consistency, but enforceability. I know these things sound obvious, but you'd be surprised how important and crucial they are to foreign investors. And local entrepreneurs and businesses must leverage partnerships to scale themselves up. There's a curse in Africa that you have too many small businesses and a lot of giant businesses, but nothing in between. And we need to help smaller businesses scale themselves up into medium-sized businesses that can attract capital. And Nigerian entrepreneurs need to be less concerned about giving away equity and more concerned about building their businesses and getting scale. In many cases, African businesses are reluctant to give away equity, so they focus on debt, and often debt constrains the growth of their business. And the right equity partners make a huge difference. And there are many, many opportunities to partner with these family offices, strategic investors, and excellent private equity funds like Helios and Actis. The other thing that Nigerian entrepreneurs worry about, but shouldn't, is being disintermediated. Foreign investors, family offices, private investors, and private equity funds are not going to go around the entrepreneurs. They need the partners in country to manage their way around the country. Local knowledge is key. And if you develop the right business relationships with the right funding partners, further investors are going to seek you out, and further opportunities will exist to scale your business. So my message now is promote successful international partnerships and investments. The money will flow. Thank you very much. I'm sure the panel are now ready to roll, and I hope that set the scene.
Thank you very much, Mr. Esov, for that presentation. We appreciate your interventions and your insight into the topic of discussion. Once again, I would like to sincerely apologize for the itch we experienced earlier on. Very sorry for the break in transmission. Right now, we will be moving to the next presentation, which is the opening remarks by the President of the Lagos Chamber of Commerce and Industry, Mrs. Tokima Bogunje, who is ably represented this afternoon by Vice President Mrs. Mojisola Bakari. Mrs. Bakari, you're welcome, ma.
Good afternoon once again, ladies and gentlemen. I want to apologize for the start of this morning. That is not the way we operate at the Lagos Chamber of Commerce and Industry. And that was a very good keynote address that you put up there. Thank you so much. I will go straight to the remarks of the President of the Lagos Chamber of Commerce and Industry, Mrs. Toki Mabogunje. At this conference themed Access to International Capital and Funding Solutions for Nigerian Businesses today, July 28, 2020. I want to welcome everybody and acknowledge Dr. Rabiu Onolapo Olowo, Honorable Commissioner, Lagos State Ministry of Finance, Dr. Mrs. Lola Akonde, Honorable Commissioner, Lagos State Ministry of Economic Planning and Budget, Honorable Commissioner, Lagos State Ministry of Commerce and Industry and Cooperatives, and of course, Mr. Robert Hazov, founder and chairman of Invest Africa. Thank you for that wonderful keynote address. Mr. Bolaji Balogun, the founder, Chief Executive Officer of Chapel Hill, Durham, the moderator of today. Mr. Yusuf Philip Yila, Director, Development Finance Department, Central Bank of Nigeria, ably represented by Dr. Zafania Ogmonaya. I want to ably recognize all the deputy presidents of the Lagos Chamber of Commerce and Industry here present, the vice presidents, vice presidents, chairmen of sectoral groups, council members, and of course the Director General of the Lagos State Chamber of Commerce and Industry, Dr. Muda Yusuf. Gentlemen of the press, distinguished ladies and gentlemen, the Lagos Chamber of Commerce and Industry appreciates Jersey Finance, a strategic partner of Commonwealth Advisory and Investment Council, for the collaboration in putting this event together. The theme, Access to International Capital and Funding Solutions for Nigerian Businesses, underscores the importance of access to capital and finance to the development of the Nigerian economy, given the large number of businesses in the country and the important role of private sector in facilitating economic growth and development. According to the Central Bank of Nigeria, total gross credit to the private sector stood at 18.9 trillion at end of June 2020, representing about 13% of the gross domestic product GDP. Similarly, the World Bank statistics shows that Nigeria's 10.5% domestic credit to private sector percentage to GDP in 2019 was one of the worst in the world. I acknowledge all the hard work all the commercial banks in Nigeria have done so far, but this is not yet enough, and there is a major gap that needs to be filled up. So the demand for finance by the private sector, thereby creating a huge funding gap and liquidity challenge to meet working capital requirements and finance new projects and expansion of existing ones. You will agree with me that there is an urgent need for long-term finance for infrastructural development in Nigeria. Moreover, the COVID-19 has elevated the risk of uncertainties around capital and finance generally in view of the deteriorating business and economic outlook. This scenario therefore reinforces the need for businesses to explore alternative funding solutions available on global as well as local landscape. We recognize the role of the Central Bank of Nigeria, CBN, in areas of expanding the frontier of finance for businesses through policies like increase in loan to deposit ratio and several intervention funds for different categories of business, including the MSMEs. We can't but mention the Anchor Borrower Scheme that the CBN has put in place to ensure that there's alleviation and connection, alleviation of poverty and connection with the rural people. I note that the COVID-19 intervention programs of the Apex Bank with 50 billion Naira targeted credit facility to cushion the effect of the pandemic on business enterprise. This underscores the need to deepen the landscape of capital and finance. In order to unlock access to international capital and finance for Nigerian businesses, we need to holistically and very quickly address issues that have constituted impediments over the years in order to align the expectations of investors with the priorities of business owners. This conference has been specifically and strategically designed to cover key areas around accessing finance and capital and to focus on the following imperatives. 1, right business model that prioritizes growth with clear strategies under different scenarios to consistently increase market niche and grow investors and shareholders' capital. 2, the importance of building structures into the business model and role of sound corporate governance. 3, how Nigerian businesses can overcome the issues of distrust of capital and finance owners, especially by small and medium enterprises, SMEs. 4, political factors, economic policies, and regulatory framework to improve domestic capital mobilization and foreign capital inflow. Distinguished ladies and gentlemen, I am pleased to inform you that our keynote speaker, Mr. Robert Hazov, our panelists and moderators are investment and financial experts of repute with sound knowledge of the dynamics of the global investment environment, coupled with convincing success track records as well. And I'm sure that we were all very pleased with a very well-researched keynote address by Mr. Rob Hazov this morning. Thank you very much. I therefore urge our esteemed audience in this webinar to pay attention to the deliberations and diverse insights so you can benefit maximally from this conference and have positive takeaways that will have a positive and long-lasting impact on your businesses. I congratulate the chairman, Mr. Obina Ayawo, and the entire members of the Financial Services Group of the Lagos Chamber of Commerce and Industry for putting together this event. Thank you all for listening, and I wish you all a nice deliberation. Mrs. Toki Mabogunje, the President, Lagos Chamber of Commerce and Industry, and I take responsibility for anything that has not been properly said as mine. Thank you very much for listening.
Thank you very much. Vice President of the Lagos Chamber of Commerce and Industry, Mrs. Mojisola Bakari, for that wonderful presentation. Next, I would like to invite the moderator of today's event in the person of Mr. Bolaji Balogun. Mr. Balogun, are you here now?
Yes, and thank you very, very much, Dr. Alabi. Very, very delighted, ladies and gentlemen, to be part of this morning. I'd like to thank the Lagos Chamber of Commerce, and please do allow me stand on all the existing protocols. Like to thank, our guest speaker and keynote, good old friend Rob Herzog, for his very, very good perspective on the marketplace. And I think it's a very useful background, for all of us to start this afternoon. We have a very exciting panel, with us this morning, and I'm going to, try to introduce in no particular order. Lexi Novitsky, who runs Acuity, which is an interesting fund manager investing in startups and across the technology sector. Lexi spent quite some time, living in and investing in Lagos. I understand she's not locked down in Lagos, but very much a Lagosian in many, many respects. Delighted to welcome Raj Kulasingham. Raj, like myself, carrying one of these COVID beards. Raj is an honorary Lagosian. Even though he lives outside Lagos, I think I find him either on a plane headed to Lagos or hanging around some of Lagos's more interesting bars, from time to time. So he knows more corners of Lagos than many of us who live here do. I'm very delighted to welcome as well Faisal Bana, from Jersey Finance. Jersey Finance, along with the Chamber of Commerce, are hosts today. And Jersey really looking with Nigeria entrepreneurs, and really trying to, make this, a destination, for many of us as we think, about a number of services, particularly for entrepreneurs and their businesses and families as well. Ayodeji Adewumi, Deji is one of the, may I describe you as one of the good thought leaders, around, the young sort of, startup entrepreneurial sector in Nigeria. And hopefully in all of my excitement, I haven't missed out, any of my panelists. I'm going to start, Obina, if you permit me, with, Raj. I think, you have, a very interesting, perspective, both, looking an active participant in the marketplace around this issue of, access to capital. And is there really an access to capital issue? Or are there certain impediments that perhaps are constraining capital? And, it'd be good to hear your perspective and have you open up, with some thoughts.
Sure. Balaji, thank you so much. It's a delight to be here. I hope we get to meet not just in bars, but in other places. Look, I think, let me start off by, maybe saying a slightly sort of non-controversial statement, which is that if you have a good transaction, you will get capital, right? So that's, that's the basic that we all agree. A good transaction, you will have capital. But I think there are challenges in raising capital in Nigeria, and I'm sure one of the things that we're going to try and explore is what we can do to get around those challenges. And I think it starts from the bottom, from startups right the way up to the top, to the large scale infrastructure projects. And there are some common themes in them. And I think Rob touched upon them. FX is a big issue, corruption, governance, etc. But I don't want to be here to talk about the problems. I want to talk about the solutions. And I think some of the solutions I hope we'll be able to explore today are actually looking at deploying capital that is available today from the local market. So looking at local currency solutions, looking at tapping into pension funds and other local providers of capital. And then I think there are also some thoughts I would like to have a conversation around about where else could local entrepreneurs go to look for capital. I mean, Lexi's been doing an amazing job in terms of providing capital in the sort of early stage technology space in West Africa, especially in Nigeria, and I've seen that space grow tremendously over the last 2-3 years. I mean, I think Lexi would, I would call her one of the pioneers, right? But I mean, she's been there for a long time doing the space. And what I found again is that that space, the early stage, seed stage capital, is actually really difficult because the lack of organized capital at that stage. So you have things like Lagos Angels, which does provide some element of organized capital, but there's no institutional capital at that stage. And then right at the other end of the paradigm, you have these large infrastructure projects which take a long time, and that's been perhaps curtailed because of foreign currency issues, the lack of access to hard currency, the fact that investors are looking for hard currency projects, right? They want to be paid in hard currency, and that's where you come into the availability of local currency solutions to be able to try and bridge that gap. So I think what you have today is kind of, I would start off with saying, capital is available, whether it's local or international, that good projects will always be able to get capital. There are some challenges around it, but I think the biggest challenge is actually how to deploy local capital. That's kind of my quick summary of where we are in Nigeria today.
Thanks. I think that's a sort of helpful insight and segue. Lexi, one of those who's been should I say quite embedded in the startup ecosystem in the marketplace. And it'd be good to, particularly bearing in mind that many of our listeners today are SMEs and people running, growing businesses. It'd be good to hear some of your perspective, while I recognize that it's, mostly around, tech focused or tech enabled, to get some of your thoughts on what are the issues and what are the key success factors for those who are able to attract capital.
Yeah, absolutely. I mean, first, if I can just hammer on how far we've come in just the past couple of years. I mean, the investment dollars going into tech across Africa has nearly doubled every year. And in Nigeria, just last year, made up over 35% of that overall funding into tech businesses. The issue is that a lot of those companies receiving a lot of the capital are actually foreign structures. So you see them structured in the US or the UK. And a lot of that is over governance concerns. IP protection is a big issue for a lot of us, as well as access to capital. A lot of these success stories have gone to Silicon Valley, and especially in their growth stages, raised large amounts of capital. So they are structuring outside of Nigeria. For us, we appreciate that and we like it, but I think that ends up being a barrier for a lot of early stage companies that are just starting out with only an idea. There's not really that friends and family money or the angels that are active really locally that can help those businesses start up like they do in other developed markets. So you see a lot of interest in companies that have gained a lot of traction, especially around fintech, but getting the companies to that point is really the barrier and where I'm looking. And yeah, I mean, you mentioned currency issues in one of the risks. That's certainly been a major issue for us. Of course, our growth stage companies have been hampered a lot. Their valuation is based on dollars, but their revenue is local currency based, so that's been a huge impact. That said, during all this crisis, digital has continued to do extremely well. We've seen a lot of companies in the payment space really accelerate their bottom line, and when everybody's moving to a live and work environment at home, a lot of enterprise software solutions are also doing quite well. So I think the ecosystem is definitely starting to evolve pretty rapidly. Continues to be barriers to accessing that capital, including regulatory clarity, especially in the fintech space, as well as governments for a lot of these companies, or access to capital, which I think has really been a barrier, especially on the venture debt side, which I would love to see.
Okay. Thanks. Lexi, that's a really useful, sort of perspective. But I would ask you, is not being structured outside Nigeria, in your sense, a major constraint?
No, it's not a constraint at all. Actually, given the current environment, we prefer that. We like to invest in companies that are structured in the US or the UK. It protects the IP on our governance concerns. But I do think for a lot of early stage angel investors, that could be an issue. And also, if you're seeing entrepreneurs that maybe don't have the budget or haven't spent any time in the US and don't really have comfortable in setting up an entity over the early stage entrepreneurs for structuring outside of Nigeria. So I don't think it's a barrier for us, but it might be a barrier for a lot of early stage founders to do that.
I see. So, you know, we see many of the startup technology companies sort of structured primarily out of Delaware and so on. You know, is that the alternative, or could somewhere like Jersey also be a really robust, you know, destination? And this is perhaps, you know, sort of a great segue for Faisal, you know, to come in. I know he will say yes, but it'd be good to hear from you, you know, first, Lexi, before I
absolutely think it could be another destination. I mean, I think the things that companies are looking for, investors are looking for, is protection, and companies that are starting up are looking for ease of access and the lower cost solution, especially in the early stage companies, and how that maybe enables liquidity in the future and exit opportunities for both the founders and the investors.
I think before Faisal, yeah. Just one thing I wanted to ask you to address as well. The other thing that I've found with investors in early stage companies is that if you're a US investor and you invest in a Delaware C Corp, there are some huge tax advantages of being a Delaware C Corp. In the UK, you got EIS and SEIS, which is a tax-based system for UK investors to get money back against that. So actually structuring in these jurisdictions allows you to attract capital. And Faisal, I'd love you to talk about that from a Jersey perspective as well.
Okay.
Yes,
great.
no, thank you very much. Thanks very much, Raj. Balaji, thank you so much. If I may start by thanking the President of the Chamber, the Chairman of the Financial Services Group, and everybody at the Chamber. It's been a pleasure, absolute delight to be partnering up and co-hosting this excellent event. A very big thank you to all of the speakers, esteemed speakers that we have on, starting with Rob Hersoff on the keynote, but also all the esteemed speakers on the panel. Thank you so much for your time. And obviously to all of the participants, I think we have about 1,000 plus that are registered to attend. We have 500 that I can see here. There'll be several hundred others that are watching the stream from Facebook. So delighted and a pleasure and a welcome, warm welcome from Jersey Finance. Our ongoing engagement, which we have with Africa as a continent, but specifically with Nigeria, into Africa, the partnership that Jersey has is multiple-fold. We have the commercial ties, $5 billion FDI coming into Africa, including into Nigeria. But then we have the political collaboration. Even our governments talk, Nigerian and Jersey governments have some initiatives going on. On the non-commercial charity sector, we have initiatives, community reach programs. So it's an absolute delight to extend that and continue with that long-standing relationship. Balaji, if I may just very quickly start by just addressing some of the points that Rob raised in his presentation, and also what Lexi said, and I'll touch on what you asked about, Raj, as well. But let me start with what Rob says, because I think quite important, it's quite useful, because we're here to provide, we're here to talk about solutions for businesses that are present in the audience. And we've heard some challenges and some threads of issues raised that would be applicable both from an international finance perspective, but also from a local finance perspective. So it makes it quite interesting to pick out some of those, and hopefully that will answer the question that you raised, Balaji, about whether international jurisdiction makes a difference. Short answer, you're absolutely right. Yes, I will say yes, it makes a difference. Jersey is a Rolls-Royce jurisdiction, but I'm delighted that Lexi also agrees as an investor, certainly in the context of IP protection, structuring and ease of access. When you start talking about these kind of things, having an international platform through an international financial center brings in the kind of expertise that the businesses that are listening to us need. So, so for example, Rob touched on uncertain legal structures, the complex tax and other local issues, the lack of beneficiation, and that flowing from the lack of funding. And then quite an important point that Rob also mentioned was the risk averseness of the Nigerian banks. It's interesting, this week, Augusto and Co report has come out in Nigeria. Obviously, some of you may have read that, and it's talked about the private banks, the retail and commercial banks in Nigeria have written off close to $5 billion in the last 4 years in terms of bad debt. So when you talk about the kind of risk minimization solutions that a banking institution would use against a bit more openness on the investor side, when it comes to established businesses, this sort of it brings in these challenges to say, okay, how do we get all these parties comfortable? So this is where, the usual threads apply, Balaji, in terms of the challenges that we have, whether the financing or the investment is coming from locally in Nigeria or internationally. We want certainty. Investors or financiers want certainty, they want stability, they want legal infrastructure to protect their investment or their financing. They want transparency. They want global reputation. So they want to be able to set up an entity and be able to navigate with that entity globally. Into London or accessing financing in Nigeria or South Africa. They want to be able to navigate all those markets without having to set up different structures wherever they go. World technology connectivity. I mean, Lexi touched on that, and you also touched on that. The startups of this current world that we live in, a majority of them are tech-based, a majority of them are disruptive, a majority of them are young people very hungry for success, immediate success. And they want to have this journey. They have a typical journey. They want to come in, they have an idea, a fantastic idea that will work locally in Nigeria. And then they want to get funding. They'll come to the likes of Lexi and Rob and say, look, I want some funding. I have a successful idea. I need to move it to the next stage, which is I want to move nationally or regionally within West Africa. So they look at the bankability of that entity or that idea and see, okay, whether we're going to support that. And then that journey continues to this IPO, and Lexi touched on that. Exit through IPO. How can you do that? How can I access an international capital market, and then also have this long-term strategy of an exit, whether it's by an IPO or, in some cases, a takeover or an acquisition by a multinational. So in all those circumstances, an international financial center like Jersey play a key role. They provide, obviously you've heard about this, they provide tax neutrality, they provide jurisdictional neutrality, they provide help, they help facilitate foreign direct investment, they provide the expertise. So I'll tell you from our jurisdiction perspective, Jersey has a population of about 107,000, but 14,000 people work in the financial services sector. It's incredible. You have the real real substance and expertise available on the ground, whether it's for funds, whether it's for tech businesses, whether it's for private wealth, all sectors within the finance industry are captured in that. So this kind of, we haven't even touched on other forms, and I'm sure we will touch on that, Balaji, in terms of other forms of financing that are there, green or ethical or Sharia compliant, all these add this level of complexity. So I think the answer to the question is, when you have an international financial center, you have this ready-made pool of individual and service providers that are there to support and provide a platform recognized globally by the likes of the OECD, World Bank, EU, etc., to give both investors, investees, founders, the comfort to come together in a neutral kind of setting.
Okay.
Now, going to just, if I can finish on this point, going to Raj's point, obviously a jurisdiction like Jersey would provide solutions for all types of investments. So we have US investors that set up funds, or fund managers set up funds within our jurisdiction in Jersey because they want access to European capital. And to be honest, this is also quite an important point for Nigerian businesses, Nigerian corporates. You want to access international finance like European capital. Jersey provides that platform. But you know, it's fair to say that Jersey will not be the solution for every type of asset base located in every jurisdiction globally. So for example, if you have an asset, real estate asset in the US, Jersey may not be the optimal jurisdiction to structure that through fully. You know, there may be a dual structure, and Raj, you know that with many kind of investments that come in, you have a multiple layer, multiple tier kind of structure that comes through. And it may be that the first half where the funding comes in can be the Jersey structure, because international financial institutions are very comfortable with having that funding structure at the top. But actually the holding structure may be structured in a different jurisdiction because of that. So this is, so I hope that answers the question. I know it's not too technical.
It does, Faisal, but I'm worried about us, you know, sort of, you know, getting a bit complicated and really being quite sensitive to the bulk of our audience. You know, because, you know, many of these companies are much smaller companies. You know, for some of them, you know, they're in very, very simple, traditional businesses. You know, I think a lot of, you know, what you say is particularly relevant, and a lot of what we've said, you know, to, you know, startup type businesses with a lot of IP, you know, around them. You know, some of these businesses are basic, you know, consumer businesses. They're in, you know, retail, you know, they're in, you know, manufacturing. These are, you know, classic SMEs in the sense that you'd expect to find in a large, you know, developing market. I also think it's important to put some, some, local nuances, you know, to all that we've said. You know, if I pick up from some of the points, you know, that, Rob made in his presentation, there are some inevitabilities that, you know, you and I recognize about Nigeria. You know, whether we like it or not, okay, somewhere in about, 20 years' time, this will become the third most populous nation on, on Earth. You know, at some point in about, 50, 60 years' time, it will become the second most populous nation on the Earth. And it will have an incredible demographic advantage, which is that all of those other nations that are around it, from a size, market size, scale perspective, are aging populations, yeah? And therefore, potentially, diminishing powers. This will be a population in its prime, okay? So when you, sit and you think about that opportunity, and imagine yourself sitting in, in China 20, 25 years ago, and someone is telling you about, without foreign capital or without foreign, destinations, you cannot get by. I think everyone who sits in the domestic financing, markets is going to look at you and think, wait a minute, where have these guys been, over our last 50 years or 60 years? So I also think it's important that we put it into, into some context and into some perspective. It is very, very important and is a key part, of diversifying, the scale of the orbit that we have. But I think what's also very, very important to recognize is the one capital, that doesn't ever run away, yeah, is that domestic merchant family office, entrepreneur capital that's been invested here, that's built billions of dollars of wealth, right? And has the ability to invest, but unfortunately, they haven't been able to connect either with SMEs or to connect with this exciting startup industry. I think, Rob, you will have some very, very, exciting, and really thoughtful perspectives, on this. And I'd like to hear from you. What do we do, to sort of strengthen that ecosystem domestically? Because ultimately that needs to work first. And it's only if it's working that international capital is also happy to, connect with it and to engage with it on a large scale basis. I'm going to come to you after Rob Ayodeji.
Well, just to let everyone know that I invest internationally through Jersey and have for my father generation, my generation. So I'm very comfortable with Jersey. So thumbs up to Faisal and the team in Jersey there. But when it comes to early stage businesses, and I'm talking seed investments, moving up to Series A, and I define Series A as companies that have revenue. So you have a business that's turning over, doesn't have to be profitable, but has revenue. At the seed level, you really need local money. And Balaji, you're always right, but you're particularly right here that for those seed businesses, you really need local money. And if you can get money from somebody who is somewhat well known in the Nigerian market, who might be known to the international crowd, just someone who has a name or a position, that is enormously helpful. Avoid debt, really avoid debt at the seed stage and at the Series A stage. It has to be equity. And if you started a business and it's small, try and get as quickly as you can to revenue generation before you raise money. But if you can't, raise it from local money. What I look for I look at Series A. I don't really want to be early stage, and there's a reason. South Africa economy, which is slightly smaller than Nigeria's, is the size of Tennessee. So if you're going to be a big success in South Africa or Nigeria, you're a big success in Tennessee. Whereas a lot of us investors are looking for international unicorns, billion-dollar companies. Yeah. So for that, you need at least to quickly dominate the local market or have a position in the local market, and then think internationally. The quicker you can think of generating hard currency or international revenues, the more likely you are to attract venture funds and family offices. And I just want to quickly say, family offices are overlooked. Yep. Because we often go from venture capital to private equity to big corporate strategic partners. Yeah. But there are a lot of family offices internationally that have invested in Africa, yeah, or would look at the right opportunities in Africa. What is a family office? There are single family offices and multiple family offices. A single family office is a family that has usually made a lot of money in an industry and either sold out, or where the dividends from that industry are so big that the family office, the place that holds that money, is almost more important than the original business. And that family office job is to deploy the capital to make investments on a portfolio basis. So the money comes usually from one industry, but the family office then has to invest in real estate, in venture, in tech, in whatever industry, and geographically. That's where there's a real opportunity for the entrepreneurs and for the SMEs, family offices. And they're often more comfortable about coming into a Nigeria or a West African opportunity because it's going to be one of a number of investments. They're not committing their lives to it. So don't overlook the family capital opportunity. But you must get local money first and get to the revenue generating point, at which point Lexi and Raj, you will have done your job and I'll step in. Can I just say, Deji, you and I are the only ones wearing traditional outfits. So, and no one's commented how handsome we look.
Honestly, you're looking really good, both of you.
Thank you.
So Deji, you've traveled this journey, and you sort of sit, in that ecosystem, probably more, sort of tech focused and traditional, industry or sector. It'd be good to hear your thoughts, and I read a very, very interesting article this past week in the UK Guardian, where the UK Guardian is talking about capital being available, to a lot of startups. But most of the startups that are getting the multitude of the capital, actually are led by, or founded by non-African founders. And that African founders on average are struggling, quite a bit. I found this really quite interesting, and it'd be good to hear, your thoughts on that, but also, tell us about, what excites you and what you're doing.
Okay.
Maybe if I can weigh in really quickly on that. I don't think that the non-local founder has really been an issue for Nigeria, even if it has for other African countries.
Okay.
Yeah, I mean, I think Lexi is spot on. So obviously, I think in Nigeria, it's a predominant local entrepreneur, local founder space. I'm not sure what the factors are, but I also think based on that article as well, there's just a large expat community in East Africa. Perhaps that might be a factor. But I think the most overlooked, and this is a critical factor in terms of starting a business, is really the team and then the market opportunity. I think by and large, a lot of entrepreneurs do complain about access to capital, but I think that if it's a real business, if it's a compelling business opportunity, I think capital will flow. Obviously, it's going to take time. It's very difficult to raise money, but at least I'm a living example. When I started my first company in Jobberman that we sold approximately about 2 years ago to a Swiss media company, the very first investor we had to convince was a Nigerian. It was a young Nigerian, made a lot of money in technology, and he was looking for opportunities within the space. And he was the very first person we convinced to raise capital from before we were able to then raise money from institutional and also from international investors. So I do think that there is also a big part of the puzzle that is often overlooked, in the sense that there's also a big part of training and education that a lot of entrepreneurs do overlook. I mean, you're going into a space and you get into a situation where somebody you're trying to convince to give you money is now educating you about the space or the sector you are playing. I think it's a shame. I think it's an embarrassment, and I think those are the questions that, as entrepreneurs, I think the skills is really, really critical. On one side, I also think that on the other side, the day you raise money, it then becomes a stewardship. I mean, you are not just accountable to yourself anymore. You are then accountable to a broader group. Okay. And I think that, and this is very important as well, I think it's super important that the day you collect money, you start seeing the money pretty much as a privilege, because you then have to, for every 1 naira you receive, you have to produce 10 naira, 100 naira of that money. Yeah. If you deeply feel that it's impossible, then you should find a way to buy out your investors. Yeah. So I think entrepreneurs, especially at the seed level and at the very early stage, see this as serious business. It's not, it's not a family affair. You do hold your investors and also your stakeholders that stewardship. And I think one of the things I do stress a lot, two things. One is the skill sets for entrepreneurs, and then the other one is just governance from a very early stage. Because once your house is not in order, very early on, it's very difficult, even if you go PLC or public, for that house to be in order. And I think once we do that, it's also going to, just even from a policy standpoint, even from some of the things that entrepreneurs do spend their time on. You only get sophisticated enough to start understanding that there are a lot of policies in the country that have to change. And it's only then that you start having entrepreneurs that are pushing for some of those policies, and then we then get better organized as against always screaming and shouting about capital, capital, capital. The problem is not capital, at least in my humble opinion. And just to give you an example as well, I'm starting to other platforms, and they do require capital, and raising money, I think in a COVID era, is enormously difficult. So I'm not saying it's going to be easy, and I'm not saying it's easy for other people that have done it successfully. But I think that it's very important to build yourself for that journey, and I think it's a marathon. It's not a sprint. So you definitely need all the nutrition, the nourishment, which I think by and large comes from the skill set. Thank you.
Deji, that's a really, really useful, perspective that you've shared. So quite recently, I've had an opportunity to interact with, a number of entrepreneurs in the space, and I hear something. I don't know whether it's a myth or a reality, but there is, a widely held thought process that with domestic capital, they never achieve the same multiples that they can achieve with international capital. Would you share this perspective, or do you think this isn't necessarily correct?
Well, I think there's an African discount, whether you're raising money. So if you're raising money internationally, you can get better valuation. But obviously, yeah, if you're raising money locally from local investors, obviously you will have to convince them for those types of multiple. But we've also seen situations where some of these rounds of financing situation also have some international investors in those rounds. But in those cases, typically what you then get is the local investors will do those multiple if they think that the multiple is justifiable. But also
doesn't it come back to Rob's point, about, really, I think local investors will look for a business that generates revenues, and, clearly has, some clear runway, for growth. And if they do find it, they will pay for it. So perhaps if they're not paying for something, it's actually a reason to be concerned, not to be, going, bullish into that scenario.
Yeah, I think that's very correct. Obviously, if, for example, if there is a price round and the local investors are less bullish, if I were to be an international investors, or if I were to be an international investor, I would be a bit wary, because if the local market is not buying into it, it might be a problematic situation. But I also do think that for a lot of international investors, the story they are buying into is the growth story. Is that this business potentially can go ahead and capture the market, but more importantly, there is also a chance that you can build a franchise, and then you can take the franchise to maybe other markets or other countries. Okay. And then potentially, I think to the point that Lexi and Frizal and Robert have mentioned, it's just there might be an opportunity for an international listing. And if you do get into that interesting situation, obviously the premiums that you can command then becomes higher. So I think that's the perspective a lot of international investors are coming from. But for the local investor, I think a lot of them are coming from the perspective of, okay, maybe the best case is you can list this on the Nigerian Stock Exchange, or maybe you can raise a commercial paper down the line, or tap the capital market through the FMDQ at some point.
I think when you say maybe the best cases, and you look at local examples like Dangote, then I think perhaps you're not being fair to what that potentially can be, for domestic entrepreneurs.
No,
I think you can.
I'm actually not discounting. I'm not discounting the depth and also the relevance of the local capital markets. And I think that when you look at the FMDQ, for example, it shows how much activity, how much liquidity, and how much capital actually is available in the Nigerian market. One of the questions I've always asked myself, and maybe this is a good place to openly share this, is what will that structure look like? Can we have an FMDQ type structure for early stage, maybe growth stage companies, not just in tech, but across board, where you have the opportunity to be able to get some capital? And if it is well put together, well packaged, you have a compelling business proposition. And more importantly, I think in Nigeria, you just have to be making money. I think the market will back it, and then they will pay the premium.
I think one of the relevant points that Lexi is asked today, for example, is, how do we begin to get, for example, something happening around venture debt, which, quite frankly, ideally needs to be in local currency. Otherwise, it becomes, some kind of death spiral convertible for the local companies that, you've given it to. And I think those opportunities exist. I just think that, there is a whole and necessary, perhaps, I would say, education process between the sector and Nigeria's financing markets. And quite frankly, if Nigeria's financing markets don't understand the opportunity, they're not even able to become a significant risk mitigant for international capital that wants to come in. The way you must think about Nigeria is that there are some investors who've been here 50 to 70 years. They make a 25% return, every year, running very basic, very traditional businesses called, multinational companies, right? And, take off, the blinkers and just look at those businesses and say, why do they work? They work first and foremost because, by and large, they recognize that they sit in a weaker currency. So they price in 8 to 10% currency devaluation every year. They borrow in domestic currency as much as possible. So they utilize the banks, they utilize domestic capital markets. They have an investor base, which includes domestic and international investors, right? And if we think about all of those reasons why they've succeeded and they continue to do well over a lengthy period of time, I think that, for those of us who are financial sponsors or investors looking to get capital into SMEs, into venture debt, there's a lot that we can learn in what those companies do. Yeah. Let me come back to Raj because, beyond, Raj's daytime job is like many of us. He has a few nighttime jobs as well. And he has an interesting perspective on, on this startup sector. And I'm going to begin to sort of round up, here. I want to leave a bit of time for us to deal with, some audience questions. So, Raj, I'm going to ask you, what excites you most? And I'm going to come around to each of the other panelists around the markets, around the sectors. And if there are 2-3 things, that you'd like to keep us sort of focused on and looking at over the next 36 months, what would they be?
Sure. First of all, listen, I learned that I needed to have a side hustle or a night job when I first came to Nigeria in 2000.
We all do.
So I've just learned from the best, right?
Yeah.
So let me break down your questions into a number of different areas. So the thing that is getting me excited and sort of is my side hustle a little bit is trying to create or advise on a seed stage venture capital fund for Pan-Africa. And what I see, and this is something that I've discussed with Rob and Lexi, is there's a massive funding gap. And again, what Aditi said is also interesting, right? So there's a massive funding gap at that seed stage, right? I think you're right that if you can get a local entrepreneur to back you, that actually helps hugely. But there isn't enough institutional capital and organized capital at that seed stage. And valuations, and again, we can talk about valuations in seed stage across Pan-Africa, but I certainly see Pan-Africa and also Nigeria, valuations at seed stage are low. And once you get up the scale, series A, B, C, D, they become much more like US, UK, Asia valuations, especially because there's so much capital at that stage, and both African capital and international capital, right? So, someone like Rob sitting in Cape Town will happily invest in a series A in Dakar or Nigeria or whatever, right? He doesn't care where you are, right? So there's a lot of capital there. So seed stage, there's hardly any. And what I think the opportunity is, if you can institutionalize seed capital at that stage, and you can exit at Series A, you can then recycle capital quite quickly. That's my personal opinion, and be good to have them. What I'm seeing that's exciting is that, in some ways, COVID has been, whilst all the negative impact of COVID we're all aware of, death and starvation, all the rest of it, some of the pictures coming out of South Africa are horrendous. Forget South Africa, look at other places, right? But it has accelerated digitization and technology across Africa. And I'm seeing this, just normal stuff, like people don't want to handle money anymore, right? So you're forced to do that. Look, my parents were 85 years old, right, are doing things they never would have done pre-COVID just because they're forced to. And that's what I'm seeing in Africa today. So edutech is really exciting. Medtech is really exciting. I mean, fintech's obviously been there for a while, but I think you're seeing the second generation of fintech companies, right? So that's also exciting. Logistics, how do you move people around? We looked at a company in Mali about 6 months ago where they were basically doing scooters, taking people around. COVID hit and their revenue fell by 90%. But because they're a technology company, because they're young, they're agile, they're nimble, they could quickly switch around and start delivering food, right? And they're back up to 100%. So that ability, that entrepreneurial skill that you find, whether it's in Lagos or Abuja or wherever in Nigeria, what Rob said earlier was that, one of the greatest skills of Nigeria is its population and its entrepreneurial skills, right? That ability to just, no matter what happens, you can somehow duck and dive and create something. That is the biggest asset. And that's what I think is most exciting about this space in Nigeria. One other thing I would say is that if you go up the scale, right? So now you're seeing things like power sector, where the power sector, as you know, is in Nigeria, and I've been doing power for 20 years now. It's a mess, and we all know it's a mess. No matter what Rob says that it's getting better, it's not. It's not getting better in South Africa. It's not getting better in Nigeria. It's just not, right? Nothing has changed. There's a diesel cartel we all know about. Let's not talk about that right today, et cetera, et cetera. But what is happening today is disaggregation of power. And with that, you're actually changing lives, right? So be able to have mini grids, off grid. I'm just investing in a company that basically does desalination from solar panels with no impact on the environment. So that those kind of technology solutions are going to change the power sector, and the ability for local entrepreneurs who understand the local landscape and take technology, hardware, software, etc., from outside the country and apply it to a local situation. I think that's what's exciting. And smart people, I'm never going to be able to sit in London or Rob in Cape Town and come up with a solution for Nigeria. We're never going to be able to. You just don't understand it, right? And that's the exciting piece for me.
Thank you very, very much, Rob. I must apologize most sincerely. I do have a panelist who I think joined us a little later, Dr. Chinedu Zephaniah from the Central Bank of Nigeria. And the Central Bank has really played, quite a significant role in terms of providing a number of intervention or subsidized, type funds, either directly, or through the BOI and the banking sector to SMEs, to women, entrepreneurs, and there's been a very, very substantial use, of the central bank's balance sheets in this area. And it'd be good to hear from you, some of that thought, from the central bank's, viewpoint, what else you can do, and welcome. I'll come back to the other panelists on those summation points.
Thank you, Bolaji. It's been very illuminating. I wish you could see my notes from where you all are seated, because somehow you are operating as a regulator, and if you're not careful, you drift into the realm of thinking you know it all. Today's discussions have taught me a whole lot, especially from hearing from Robert and Raj, and of course, Lexi. Thank you so much. You see, I believe the challenge of raising funds all over Africa is similar. The key thing is there is an entrepreneur at one end. The skill is there, the passion is there, but the funding sources in Nigeria, I mean from the financial system, would require that entrepreneur to place a certain amount of collateral on the table. Because of our level of infrastructure, the interest rate is above the roof, and what have you. I mean, these are challenges that everyone on the panel knows. But what the central bank has done is to find a way through the banks, deploy regulatory forbearance in the wake of COVID-19, find a way to not just lending from our balance sheet, to bring out policies that create an enabling environment in which a bank that is committed to funding the real sector will find opportunities to play. And if in so doing you have some discomfort, I would say discomfort, the central bank will come and bail out. And having said this, beyond those policies that look at the entire financial system space, we have had to do some things like other central banks of the world. The key one right now is what we are doing for COVID-19 for manufacturing, for those in the manufacturing space. Two speakers here today have spoken about beneficiation. Until Africa, Nigeria in particular, is able to add value to what we export, we will continue to grope in the dark in terms of development. So the CBN has brought out a real sector support facility that targets manufacturers in this COVID era. It's an opportunity for every manufacturer, the top tier manufacturers, to access funding from the central bank to engage long-term for manufacturing. I forgot to speak about that as well. It's not just about the funding, the rate of the funding, of course, the tenor of the funding, because the financial system is filled with preponderance of liability that is short tenured. And so for all the interventions from Development Finance Department of the CBN are such that allow a long time for the entrepreneur to utilize this fund and be able to make some money before he's asked to repay them. So, and then for beyond the large scale manufacturers that will need to access finance to import equipment, there is also targeted facilities for small and medium tier operators in the space. There is a COVID-19 loan for households, COVID-19 loan for small businesses, COVID-19 loan for the larger businesses, and other array of businesses. The point I'm trying to make is that we quite understand that everybody who needs a loan in Nigeria, who has the skill, would be asked to bring some stringent requirements before you can access this. So the central bank is playing the big brother role by providing those funds long-term, finds a way around the unconventional, around the conventional collateral structure to make sure that the three basic tiers of entrepreneurs, the big boys, the medium tier, and the small scale people are able to access at a single-digit interest rate and for long term. Balaji.
You're on mute, Balaji.
Pardon me, I'm so sorry. I was speaking on mute. Thank you very, very much. I think, that background is, really quite helpful. And, in many respects, we continue to see, the central bank really stepping in the gap, quite often and creating, a number of platforms, obviously all debt. What we need to do, is to ensure that we can bridge that gap with some equity. But perhaps it's a good time to come to Lexi now. And Lexi, as you round up, what excites you around the market, and what are some of the things you're focused on over the next 3 years?
Yeah, absolutely. So I'll be a little bit concise because I know we're short on time, but very much echoing Raj's comments on opportunities of early stage investments. I think being local, you see a lot of deals quite early from very strong founders before they do market their business to an international audience. And different to Raj, we feel that the most competitive companies, you have a very difficult time getting involved in a meaningful way in the Series A or Series B stage unless you already have a position that you're able to protect from the seed stage. So we're looking at investing in many companies in the pre-seed or seed rounds and leveraging the most successful companies through their growth rounds of Series A and Series B. And the verticals, the sub-verticals that we're most excited about, still fintech, still believe that there's a lot of problems to solve in that space, and even probably some aggregation and consolidation that we're quite interested in. But we also really love solutions that are enabling pan-continental trade. Rob mentioned that you really can't be a one-country solution on the continent. And we're looking for companies that are really enabling that within the informal sector for large enterprises and also cross-border companies. And during this time, also looking at solutions that have really helped a lot of these traditional enterprise companies move to the digital space, whether that's managing their inventory or managing their workforce that is increasingly working from a remote environment. And we love soft infrastructure solutions. So for that, it means really we love things around KYC, identity, data insights, and kind of the back-end infrastructure that's really driving financial access. So we love payments infrastructure as well. Those are the key things that we're really looking for. And I put in an email that any entrepreneurs can send their pitch decks to into the chat. So I'd love to hear from
Thank you,
any of them.
Lexi. And Faisal, it'd be good to get some closing thoughts from you.
Yeah, I think, thanks, Balaji. I think from my side, the exciting thing for us and for us as a jurisdiction is the excitement. And I'm so thrilled at the discussion that Ayodeji led around stewardship, around the future of Africa. We firmly believe the future of Africa is in African hands. The money may come from investors that are outside Africa, but it is going to be businesses that are sitting right now in our audiences with that idea, looking for that seed money, that are going to be the big unicorns, as Rob says, of the future. and we are very excited. We know the typical investor is young, tech savvy, very ethical minded, wants to give back, wants to make something of their own community, wider community, whether it's within their own locality, nationally, or indeed Pan-African. And they're increasingly they have a global outlook. Jersey provides that platform, that partnership, that collaboration, gives them that access and comfort to know that they get these world-class partners that come and work with them to develop their ideas, to make their businesses, their investments a success. And at one point, even when they want to exit, Bolaji, these businesses can exit through international markets, whether it's the London Stock Exchange. I know Ayodeji talked about the Nigerian local market, but you come use a Jersey platform. Jersey entities are now listed in both the main markets in London, in New York, in France, in Hong Kong. So that platform allows you to exit when that time comes, or gives you the comfort to be able to take your business to the next level. The excitement is going to be driven by Africans, is going to be made by Africans, and is going to be celebrated by Africans.
Thanks very much. I think the message there is really about the opportunity, available in Jersey. Like Rob, I know Jersey as well, and I think there are many benefits for utilizing that particular destination. Ayodeji, what excites you, and what's keeping you busy?
So I think for me, the most exciting thing, and I hope I'm lucky enough to be able to leave the dream, is pretty much launching or pretty much building a Nigerian company that I can obviously take to the rest of the world. And I think that one of the maybe the best businesses that have been able to withstand the devaluation, I think, Balaji, like you mentioned, are some of the multinationals, and how they are multinationals. They had currencies, but locally they finance operations locally. But I also do think that it's about time that we start building institutions, and not just building companies to be able to feed our families. So building institutions that become multi-generational, and institutions that you can take to the rest of the world, not just to the rest of Africa. I think over the last 25 years, with the wave of banking, a lot of the banks have now expanded to other parts of Africa. But I think for me, over the next 10 years is how can we take some of this homegrown local brands to the rest of the world. So, and one of the things I'm working on, hopefully we hope to be able to do just that, and if we are lucky enough to also get listed on not just on the Nigerian Stock Exchange, but also internationally on a stock exchange, maybe in Europe or the US. So I think it's about time we start building institutions.
Great. I think sometimes it's we perhaps forget how short our formal entrepreneurial history is as a country. Loads of informal businesses up to past independence, but to a large extent, when you begin to think about formal entrepreneurial businesses owned by Nigerians, this started very much around the banking sector, in the early 80s, and that's not even 40 years ago. When you think about, entrepreneurship, the first Nigerian owners around the oil industry, Niger Delta exploration and production, Oando are babies of the 90s. So in some respects, it's important always to sort of, keep that perspective in mind. We're trying to do in 25, 30 years quite aggressively what other parts of the world, have had 100 years plus to do. And, we will do it, with some learning pains, and we will pay some school fees. But I also think that the output and the outcomes are going to be very, very exciting. Yes. Dr. Zephaniah, let me take a last word from you.
Okay, thank you, Bolaji. Well, simple. Nigerian businesses need to understand that capital is not like buying a box of chocolate off the counter. When you want somebody to invest in your business, I'm speaking from the perspective of a financial institution, the numbers have to add up. They are not there as a social institution, they are there for business. There are regulatory framework guiding their operations, particularly as it relates to lending. And when those businesses have the right structure, the potentials are good. When they try and they are not able to succeed with their bankers, the central bank will help out. But there's a proviso to that. Even the central bank will want this money to be paid back. Otherwise, the balance sheet of the bank will be eroded. And so finance is for businesses that are at the top best, survival of the fittest. And we want those loans to be paid back. And finally, I'd like to say that the balance sheet of the central bank is not limitless. We can only do so much. When we hear people say, do you really have this intervention? We hear it on the radio, it doesn't get to everyone. There is no way to get to everyone. Thank you very much.
Thank you very, very much. I'm hoping that I've left a bit of time for a couple of responses to questions on the chat. Rob, go ahead, please.
I'll be very quick on this one. Raj has got Launch Africa and the Nest. Lexi has capital available. I have a Series A profiling business called the Lion Cage, and I've put in the Zoom webinar chat an invitation. In 2 hours' time, we're profiling 2 companies on the Lion Cage. It's our 28th company we're profiling. And in many cases, we show companies that don't need to look for money, but are looking to expand internationally and looking for partnerships and relationships. So what we need to do as Africans is promote success stories. There's so many from Nigeria, West Africa, South Africa, Ethiopia, Rwanda, Kenya, and we need to find a way to pull together and promote the success stories of Africa that go from nothing to early stage investment to Series A, and maybe they're at Series A right now, but they could be international businesses. There are so many just waiting for us to discover them and take them to the next level. And the capital is available. The capital is available. So, Raj, you've got, let's at least show everyone where to position their stories. I'm Series A, but Raj and Lexi are early stage. And what I like is tech, and Balaji, you correctly said, and it's lovely, there's opportunity and there's money, but what we've got to do is leapfrog what you mentioned, that we're 100 years behind or 50 or 30, it doesn't matter. We have creativity, intellect, and the capital is available. Let's leapfrog the old businesses.
Absolutely.
Let's do it. We've got a real chance to do so.
Very, very much so. Thank you, Rob. And all of you, thank you, I think, firstly, for sharing emails and contacts. I'm a betting man, and I believe you're all going to find 25 to 30 proposals on your emails, over the next 24 hours. I think you'll figure out the real entrepreneurial character of all of our listeners. I think it's a good time, if you agree with me, for us to try and deal with a couple of questions that have come on the chat. And, Obinna and Dr. Alabi, you've been studying the chat perhaps, much better than I have, please help us with any questions that you think they respond to. I think most people would like a copy of Rob's presentation. Most of the
Bolaji, can I do a quick plug for the Nest?
Yes, of course.
So the Nest, a bit like Rob's Lionsgate, the Nest is a online Zoom, effectively like a Dragon's Den or what's the one, Shark's Tank in the US.
Yep.
So basically every week on Thursdays, we have 2 companies pitching to 3 angels. And I think that's a great resource for people to just see what it's like, because these companies have been curated, right? So you have to go through a selection process to get to the Nest. This week it's quite exciting because one of the companies I invested in called AMP, which is doing something called Mike Africa, which is to showcase urban culture and urban music across Africa in 6 different countries, is going to be presenting to a panel which includes Wyclef Jean from the Fugees. I don't know whether you remember the Fugees or not. So please tune in. I've sent details on the chat. Again, it's a great opportunity to see what you can see entrepreneurship at work. And perhaps one parting comment from me, from what Ayodeji, I really liked a lot of the stuff that Ayodeji said. It really resonated with me. And I like the fact that he said that as an entrepreneur, I'm a steward of your money. And I take your money, I have to keep you engaged, I have to make you money and return back. So I'm not doing you any favors. You're giving me money, I have to steward that money and keep you engaged and make you money and give it back to you. And I think that is a sign of a good entrepreneur.
Mm-hmm. Great.
Okay, sorry, Bolaji, I don't know whether you want me to...
Yeah, go ahead, please, Obina.
Okay, thank you all. Thank you, distinguished panelists and our guest speaker. I think this question is from the chairman of the Nigerian Stock Exchange, Mr. Bimbolo Gubanjo. It says, and this is to Mr. Adewumi, it says the growth board at the Nigerian Stock Exchange was established purely for fast growth, early stage SME companies. And so what you're aspiring FMDQ to develop is already in existence at the Nigerian Stock Exchange. And I would encourage you and other SMEs to look closer at a growth board listing. If you feel there are any constraints to raising capital via this route, you should please share it here so that we can all be the more knowledgeable for it. Thank you.
I think that's a very important indication of some of the work that's already going on, in domestic markets, really around, growth companies. Any other questions or comments?
Yes. Yes, sir. There's another one. This fellow is an anonymous participant. He or she wants to know how NGOs can benefit from the subject of discussion today. And the second one is about the CBN's intervention on the Forex crisis and how to allay the fears of foreign investors. So those are the 2 questions.
Okay. So I think a lot of NGOs to a large extent are really reliant on, philanthropic capital. Some of that philanthropic capital is provided by, family offices, or in some instances where they're organized, around foundations, and
I was going to say, just on that first part, I'll also add, actually, from a Jersey perspective, and also other international financial centers, is impact funding. And impact funding is quite a unique phenomenon. It is it's significantly growing within the continent. And impact funding is around social development goals, and non-governmental organizations that fit that bill have access to this impact funding that gives the investors a commercial return, but serves that altruistic purpose. So that
Yeah.
also area is also unique.
So it's a very good point you make, actually, and that's, you know, one of the interesting things about our market is that, you know, every large entrepreneur or every large, you know, business in Nigeria that develops to a large extent simply because you live in a country where there's so much need around you, simply because, you know, everybody is minded, you know, about, you know, the extent of poverty around you, without actually realizing it or advertising it. You know, almost every business here or every large, you know, financial institution is an impact investor. You know, when you know, begin to let businesses like Dangote understand, you know, a bit more about, you know, what impact investing is about, or Lafarge, or, you know, any of your largest banks, you know, or even businesses like ours, you will find that everything, you know, that all of us do is focused on job creation. We're very focused on gender. You know, we're very focused on accelerating infrastructure. You know, every single thing that you do, if you're a large business and you live in a market like this, actually has a big impact element to it. You know, we just all didn't understand, you know, the technicality and the nuances and applying that language. But the largest entrepreneurs and merchant businesses, you know, here are probably some of the biggest impact investors on the continent, and on a scale far beyond, you know, any dollars that are coming in from outside, you know, other than foundations like the Bill and Melinda Gates, you know, Foundation, which are very substantial here.
I think, Bolaji, just to add on that, I think it is quite interesting from an African perspective that the conversation has shifted. So, you know, the pride of the African is that, you know, give me your money, but, you know, you can have a commercial return on it. And you know, you may help me in my journey, but actually I don't want it for free. I want to give you a return. And, you know, just touching on what Raj said about Ayodeji's stewardship comment is exactly right, the mind shift.
Very much so. Any other questions?
Sorry, Bolaji, can Adewumi respond, you know, to that question? So,
is it the question specifically on the growth board of the stock exchange?
Growth board, yes, to see where you can raise, you know, whether there are any issues or challenges, you know.
No, I mean, frankly, I think the growth board, I think has been around for maybe the last 3 to 5 years. I think that people do know that there is such solution out there, but I also do think that there is opportunity for obviously management and stakeholders at the Nigerian Stock Exchange to maybe specifically target some of those companies specifically, just in terms of getting them to list. So I do think that there's it's not a criticism. I just think that there is much more that can happen from that perspective. And one of the best ways to achieve progress is when you find examples of other contemporaries or peers that are doing this type of listings. It will definitely create that momentum required in the market. But I also do think that there's another camp, and that camp is a broader and larger camp than my own camp, and they have no idea that there's a growth board on the NSE. Yes, on the Nigerian Stock Exchange. So I think the summary of everything I'm saying is there is definitely opportunity for them to pretty much reach out specifically to some of those companies in specific industries that they can attract. So yeah.
Well, panelists, ladies and gentlemen, very distinguished guest speaker. I was hoping to be able to bring this in on time today. I'm running probably, 5-6 minutes later than I would have hoped. Let me thank you all. I think it's been an extremely exciting, conversation. It's certainly something that we should, find another opportunity, certainly to extend. And I'd like to thank, our hosts, the LCCI and Jersey Finance, who have co-collaborated on this. I think it's been an extremely useful platform. And let me now hand back to Dr. Segun Alabi. My name is Bolaji Balogun. Very delighted to have done this.
Thank you very much, sir, our panel moderator for today. We have enjoyed every bit of the panel discussion. We want to use this opportunity to appreciate everyone, but to do justice to that and also to bring everything to a close, it's my pleasure to warmly welcome the chairman of the LCCI group, in the person of Mr. Obina Ayam. Please move the closing remarks and the vote of thanks. Mr. Chairman, over to you, sir.
Thank you, Dr. Alabi. And I would like to thank our panelists and our keynote speaker. But most importantly, I think we've all enjoyed the quite illuminating session we've had. We'll graciously thank our dear President, Mrs. Tokima Gobunje, for her inspirational leadership, and thanks to our Vice President, Mrs. Mojishola Bakari, for standing in for our President. Our able Director General, Dr. Muda Yusuf, for his wonderful support always. Jersey Finance Strategic Partner to Commonwealth Enterprise and Investment Council for the wonderful collaboration at this event. With special thanks to Mr. Alan Wood, Global Head Business Development, Jersey Finance, our keynote speaker of today, Mr. Robert Hessoff, all our distinguished panelists, Mr. Faiz Obana, Ms. Lexi Noviski, Mr. Raj Kolasimgam, Mr. Ayodeji Adewumi, Mr. Yusuf Philip Yila. Thanks to Dr. Chinedu Zephaniah for representing Mr. Yila. Our moderator of today, Mr. Bolaji Balogu, thank you very much. And of course, you, Dr. Segun Alabi, our anchor for today. We thank you sincerely. And thank you to my superb ESCO members and our financial services group members for all the hard work and your kind support. For non-members that have joined us today, thank you all. We encourage you to join the Lagos Chamber of Commerce and Industry and surely give your business the advantage it needs to win. Once again, I would like to thank everyone. Thank you and God bless. And also we hope to see you sometime soon. Thank you very much.
Thank you, and stay safe, everyone.
Thank you.
Take safe,
very much.
stay safe.
And on that note, we have come to the end of this exciting, wonderful international webinar on access to finance and funding for Nigerian businesses. Once again, on behalf of the President of the Lagos Chamber of Commerce and Industry, Mrs. Tokima Bogunje, we want to say thank you and God bless you. Bye.
Bye.
Thank you, Balaji. Thanks
Thanks,
everyone.
Balaji. Thanks, Rob.
Speak
Bye.
soon.
See you soon.
Raj, take care.
Take care.
Bye.
Take care.
Bye.
Bye.